Testing 1, 2, 3. The Wayne in Spain falls mainly on the beach. 1, 2, 3, 1, 2, 3. All right. 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 2, 33, 366. Or is it 377? 144, 2, yes, it's 377. Cool. Good to be here. Let me have another suck of coffee. Ah, beautiful trading, huh? Wee, wee, wee. Zit. Very, very good. So today is a Thursday. Thursday, November 10th, 2016. Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Really happy to be here this morning with you. Thank you for being on my team. I do these sessions 7:30 in the morning, Monday through Thursday, here at Forex.Today for free. Every Friday, I'm at FXStreet.com for premium members, where you have to pay. I'm also Forex Speaker of the Year. So once again, thank you for being a client of TradersWay, and if you're not, please go to TradersWay.com and open up a demo account. It takes maybe a minute, and you download MT4, you know, all that kind of stuff, and test us out. You know, show some respect. Oh, hang on, I didn't load the charts. I rebooted into a different browser. So have you guys been busy trading like maniacs? I haven't seen the normal amount of trade plans posted. What's going on? No, don't be sorry. I mean, I'm worried about you. No, I wiped out and was and what? You wimped out or wiped out? Yeah, no, I get it. It was crazy. Lots of trading. Yeah. It was an unusually good month for me, but at least I can explain it with beta. So one of the things we talked about is if you do unusually good or unusually bad compared to what the market is doing, then there's a real problem. So you could say to somebody, hey man, I made 15% this month. And they're like, really? And they look at the market and nothing in the market happened. It was a very quiet market. And if that's the case, you took on risk. Okay? That's the only way to achieve your alpha. If the beta is low and you have high returns, then you just simply cheated by taking on too much risk. Okay? So but right now I'm doing unusually well, and but I have the beta to allow for that, right? So I did unusually well, but then I could say, well, look at the market, look what the market was doing. We just happen to be always on the right side. There you go. There we go. There you go. Cool. So you got it. All right. So yeah. So here we are. Like I said, I was looking at the posts, and it's the normal guys that I see every single day. They're like machines, posting their trade plans. I really appreciate it. But then there's quite a few that haven't, and So I was a little bit concerned. So Miles, you blew up your account? Seriously? Oh. Yeah, it'd be better if you made money, right? Shoot. Well, what was left of it? Well, I'm really sorry to hear that. We need to figure out why, though, Miles, because the market was moving well. It was moving as it should. It behaved as it should. Um, yeah, beautiful, beautiful trade plans here, Daniel. Very nice. Very, very good post. Thank you for taking the time. Look at that, just beautiful. So yeah, so unfortunately, Miles, the market has been moving. It has been volatile, but it's been doing what it's supposed to be doing. So, well, you over leveraged, of course. So that's dumb, right? I mean, I don't know. What am I supposed to sugarcoat it, right? But then, what were you doing? So I guess your stops are too close, or were you? I don't know. There, even if you were over leveraged, it, it seemed to me if you were buying at support or selling at resistance, you still would have done well, unless it was so ridiculously over leveraged that 10 or 20 pips was your stop or something. Yeah. No, but see, I don't buy that, Miles. Let's cut to the chase on that one. Ooh, I only had $100 in it, so I gambled the whole thing. Oh, I don't get that. I don't get that. So the test that we had yesterday and the day before had to do with acting the way you want to act when you become a professional trader. Just simply pretend. Even if you had $100 in the account, you were supposed to act the way you want to act. Yeah. So yeah, good. So do it. So and thank you for sharing. I mean, obviously, the openness and honesty is not an easy thing to do. So I appreciate that. Right? Yeah. So anyway, so that's an epic fail, right? You were given a test and you failed. So you need to figure that out, right? Yep. Yep. Well, that is the key. All right. So yeah, pull yourself together and figure out what went wrong. Um, but unfortunately, the market has been behaving very, very well. Um, I don't know. Like, what do we pick? I mean, there's so many good trades. So I'll show you pound yen, for example, beast. Well, Ron, I don't know, man, right? Traders have a difficult time when you blow up a trade account to go raise new money from investors, right? They're like, well, what did you do last time? Oh, I blew up the account. Really? Well, I have to go. I have to go now. Right? So, no, he's got to at least pull a demo account together, right? At least pull a demo together. And I don't know what's going on here. Come on. Pull a demo together and trade it like he's supposed to trade it for the next year or two. Okay? Next year or two. All right. So here's a funny story. Boy, something is slowing me down today. Do I have a drawing tool already open? No, I don't. All right. So yesterday I was actually short this for a bit. Guess where I got out? Right in there. Okay. See, very, very logical, very, very intelligent. Up, up, up into 32. It fails, right? Comes back down to the 21 EMA, roll reversal, and long it. So even the short, look at this. Drop, double top Asia. I mean, just sitting there waiting, right? Sell, 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 sell. And look at out, 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 out. And then another opportunity to move on.com. So whether you're counter trend trading, which is I don't like doing at all, to be honest with you, but you do sell at red zones, right? And then returning back into the trend, right? Essentially, you know, at the London Open, kicking off the hourly 21. Like there's nothing odd about this at all, is there? Oh, you did that on the fiver? Yeah. I mean, I'm just showing on the hour, right? Just like a basic thing where it made a higher high, retraced to the roll reversal, and kicked off the hourly 21. I mean, that's the thing books are made out of, right? You could put that in your book. But even this, so like on the 15-minute chart, I mean, even selling that at the Tokyo Open, I mean, look how it happened like exactly Tokyo Open. Big drop, pull back, and if I remember, there's a psych level in here. Yeah, look, 131. Okay. Down, and I had a bunch of limit orders there, out, 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 or, you know, for profit orders, out, 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 out. And then, you know, I mean, and it just starts doing what it's supposed to do again on these lower time frames, right? Oh, I didn't draw that very well, but anyways. I think you get what I mean. I guess I should have done it this way, right? Okay. And things like midpoint psych levels were supremely important on this one, so 50 is about there, right? So up, down, again, gone. So whatever. The trades have been there. There was the double top on Kiwi with all the Kiwi news, right? People are very uncertain about Kiwi. I mean, it was nice going forward, but we all knew, and you guys knew very well what was coming up on the Kiwi dog. Okay. And then zoom in a little closer. That's the daily. Zoom in a little closer. And let's change the template. In the purple rain. Let's do day trading sessions. Yeah, that's what I want. That's what I want, what I really, really want. Okay. Asia opens. Obviously, you know, interest rates and future interest rates and all that kind of stuff. We knew, like I asked you two or 3 days ago when the Kiwi news is, and everyone says Thursday, you know, boom. So anyways, big old pullback right off the top, very technical. No one wants to break through 78 today. If you were sitting there like a sniper with an ambush, you could have got this, right? Played it like a double top. Bear in mind, everything else came down at that time too, right? Do you remember the pound yen I showed you? Pound yen did this, and this did this, and I mean, everything hesitated at the top, right? But look where it came down. You see where it came down to? This is going to be hard to see because I got so many lines. Yeah, it made a 3A2 Fibonacci retracement in the London Open. So if you were a long bomber, you bomb it there, you long it here, right? Doesn't mean it's going to work because we got some fundamental issues going on here. But even if you were a bull and let's say you knew nothing about fundamentals, your technicals put you long here, right? Kick off the pivots, the 382 London Open long bomb on your Kiwi yen. Yeah, I know, you're only up, you're only up 20, 25 pips. It's not a lot, but if you're a bull, that's what you do. If you're a bear, you do this, right? And now if you're a bear, you're waiting for the reverse fib, right? And a bear has got it set up this way, right? So it's one of these things like if you're a bull, it's doing exactly what you want it to do, right? There's the midpoint psych level. So, right, if you're a bull, it's doing exactly what you want it to do. If it's a bear, it's doing exactly what you want it to do. Uh, Hoyo, it always comes down to, is it Hoyo or Hojo? Is it an H or a J sound? Joe. Hojo. Joe Meister. It always has to do with other, like for example, future interest rate hikes or cuts. Okay, we're worried about 2017, not necessarily now, but also, um, you, Trump is an interesting thing in the sense that for some reason experts didn't see it coming. All right, fine. Another amazing, where everyone gets in the room and convinces themselves of one thing. So the media and everybody else got together and convinced them that Hillary was going to win. And so you could argue that maybe people didn't have the right trades on or the right hedges on. But what it sounds like Trump's going to do, and I don't know where this comes from, but so again, it's all the idiots talking. But this is what I hear on Bloomberg, because I listen to Bloomberg when I shower in the morning. Now, on Bloomberg, they say he's going to do massive stimulus. Fiscal policy is what it's called, where he's going to build railroads and airports. And why not? He's a real estate developer, right? So he's going to throw a bunch of money into real estate, making roads and trains and airports and whatever, conference centers, who knows, right? Yeah, but, right? Yeah. So, so that is good. That is different. We all know that Janet Yellen's tools are essentially exhausted. More monetary policy isn't going to do anything. And it has diminishing returns. It's just nature of the beast. So if Trump comes in and spends trillions of dollars, which, I believe Obama said he was going to, right? I don't know if it happened. But anyway, so if Trump comes in and does that kind of fiscal spending, then that's really, really, really good for the economy. That's really good for commodities. That's really good for global macroeconomics. Especially, just on the simplicity of it, it's doing nothing like Obama hasn't helped. Now, maybe it's not Obama's fault. I don't care. It's a different conversation. All I know is we've needed the government to do something since the 2008 crisis, and nothing's happened except for cash for clunkers. That's the government response. Now, we did have the government come out, Geithner come out and print a bunch of money, throw it at the banks, gave them billions of dollars each, and didn't even have a way to track. Didn't track what was done with it, didn't track where it went, didn't even have any rules. So the bank said thank you, and they built helicopters and refinished offices, and I mean, whoa. So the government's response has been almost criminally negligent, in my opinion. Just like so beyond retarded. It's not just stupid. Like there's a physical. If the government was a brain, there was actually some physical malformation or malnority. It was broken, right? So it's just like, wow, really? Because common sense would tell you that you should have some rules attached to the money and that there should be some tracking mechanism. I mean, this is what we do in business, right? What's your business plan? Where's your, give me an Excel spreadsheet and show me how these investments have been panning out, right? I mean, just basic common sense, right? So anyways, if Trump, going all the way back to Trump, if Trump comes out and actually builds some roads and some schools and some hospitals and some post offices and make the airports better and put in alternative forms of transportation, awesome, man, cool. Better than doing nothing, I'd say, right? And that pumps money into the economy and more into the real economy. Because remember, when the Fed prints money, right, they give it to the banks, right, by buying bonds. If I'm talking about quantitative easing now. So the Fed makes some money on the computer, zeros and ones. Then they go to a bond dealer like Goldman Sachs, buys a bunch of bonds. Now the bonds sit at the Fed, and now Goldman Sachs has money. And what does Goldman Sachs do with the money? Put it in their bank account at the Fed. So now the Fed has Goldman Sachs's money, and the Fed has the bonds. Well, when does that hit the real economy? Okay, and there's something like, I forget the number. I remember I studied it maybe a year and a half ago at Harvard. We looked at some of the stats, and I forget what it was, but it was like $3 trillion. No joke, something like that. Like $3 trillion sitting at the Fed that didn't get put into the market. Yeah, so it never entered the. But what they were really doing, Ryan, is recapitalizing the banks. All right, so let's say Miles is down to his last $10 in his TradersWay account, right? He's made a bunch of high leverage, stupid trades, and he's about to blow up. So TradersWay says, well, we're going to give you $1 million, Miles, and we're going to put it into your account. No, you can't trade it, right? And you can't withdraw it. But at least you're not at the risk of blowing up your trading account. Right? You get it? No, right? But now you have that money. But now you wouldn't be over leveraged because technically you have $1 million in your account, even if you did one standard lot, right? But don't lose your $10. Oh my God, Ryan, going into swaps? No. I suppose it depends on what you mean by swap. Do you mean interest rate payments? But anyways, let's move on. .com. So anyways, if you guys have been doing what you've been doing, again, what were my messages yesterday, the day before that, and the day before that? The volatility is going to be high. You need to decide what you want to happen as far as your strategy, whether you're bullish or something on bearish, before you even start. You need to use things like OCOs, 25 pip stops with 50 pip limits. That way, even if you're 50-50 on your trading, you will be profitable, right? Even if you only have 40% winners, you'll still be profitable at least, right? So, and then if you are a bull, you only buy at support, right? You'll only buy on pullbacks, right? And if you're a bear, you only sell at resistance. You only sell on pullbacks, right? Remember all that advice? And it seems to me if you'd done that, you should have made money, right? So like the green zone, right? We know there's a high propensity for it to go up. It went up, down. Now, as soon as you see that it hit the 21, like a bear would sell that 21, and it went down, and then that busted. You just know, holy crap, stop everything, right? Buy the next dip, right? Buy the next dip, buy the next dip. Where? Up into resistance, right? I don't know, son. Right? Going into Asia and you're not making a new high. Once again, there's a place for bears to be. Okay? A bear might have considered in here as well, but probably didn't get an entry. You see what I mean? But there's definitely entries here. Oh my God, right? Sell at the top, sell the drop, sell the pot, right? And then here, double bottom, our high, right? Again, double bottom, 3A2 kicking off the pivot point area. So if you just stayed a bull, or if you just stayed a bear, right? If you only bought dips and if you only sold at resistance, right? Again, very clear, easy opportunity to sell here if you're a bear, then you'd be making money. And this is this kind of stuff that I teach you every single day, right? Because when you get up into here, guys, when you get up into here, there's only two possibilities. It falls or it rises, right? Now you say, well, wait, it could always be that way. Well, that's not 100% true. I mean, kind of, but not really. Like, so what you're risking now is, you know, I mean, that's even too much, right? What are you risking here? 10 pips? 15 pips? I mean, my God, it's like nothing, right? So it either falls or you lose 15 pips and it trends up. It's when you're trying to do both and you're like, oh, I'm a bull, I'm a bear. Oh, I think it's going to go up. Oh, no, it's a sign it's going to fall. And you haven't had a strategy, right? Has anyone been trading without a strategy? Is anyone here willing to admit it that the last few days you've been trading with no strategy? That you've just been locked in on a 15-minute chart and a 5-minute chart? Okay. Okay, there, Andrew, and maybe Andrew's doing well. I'm saying that it's dangerous. Okay. If you're hardcore skilled, you can also swing both ways like a broken gate. But you better still know these higher time frames. Like if you didn't know that was a 3A2, or if you didn't know that was a pivot point area, right? 76.32 wouldn't have meant anything to you. But it means something to a bull. Okay? Okay. But I think most people are not quite ready for that. And even if you, like I just said, even if you are trading a 5-minute chart, you need to know these higher time frame things. Like if you didn't know that was a double top, it would be meaningless to you, right? But beautiful, lots of beautiful trades in there. Now, keep in mind, these bulls want it to go higher, right? Would you agree? The guys that bought the 3A2 want it to go higher, don't they? They want it to go to 1618. So they're new micro buy zones in here. So they want this, okay? This is why you can't be selling now. Okay? This is why people that wait for price to tell them what to do, or wait for confirmation or whatever it is, when you're late, you get punished. Even if you're right, you usually lose money when you're late. Okay, you know what I mean? I mean, look how much time you had here. If you were already ready, down, up, down, up, down, up, down, up, and now you're selling? Like, what's wrong with you? Where were you the last hour and a half, right? So now you should be waiting for it to go up if you're a bull. So you say, oh, double bottom. Okay, we're coming into this land, this territory. This is buy zone kind of stuff, right? Somewhere between 0 and 80. It's probably going to go up. Well, we're at 90, so within the next 10 pips, a bull would assume upward action. And so now they're waiting for green candles, higher highs, 5A crosses, oscillator moves, whatever they're waiting for, they're waiting for. Okay? But, right? But if you were going to sell, 77.50 is so stupid, ridiculously obvious. Right? Selling near 77.00 is so stupid, ridiculously risky. Where were you up here if you were a bear? If you were a bear yesterday, if you were a bear this morning, if you were waiting and waiting and waiting for it to get up there and they're like, aha, 77.50. It's going to turn red. It's going to turn red. Oh, and then it goes red, 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 red. Double top, red, red, red. You're just like, oh my God, I'm going to crush this. And you dump it. Yeah, it's a little risky here, but you're selling off the 50 off of a double top. What? All right, this just collapsed over here. So get ready. If you're a bull, you still have to wait. Do you buy blindly? No. Right, but we're right there on the 80. Right? We're right there on the 80. And if it drops, you just don't get an entry as a bull. That's all. That's all it is. That's it. But your money is made by making a decision. You'll never make money chasing price around at all. Ever. Never, ever. Right? Gold. Yeah, I'm happy to look at gold. Okay. So wasn't I joking with the with our South African brethren yesterday about like spend it while you can? Did anybody spend it when they had the chance? Gold. Yeah, we were here yesterday, and I said, "Spend it while you can. Spend it while you can." Right? You remember all that paper wealth I was using as an example? We were talking about Yahoo. You remember that? Spend it while you can. Oh, it's gone. I'm so rich. Oh crap. Yep. Yep. There she go. Eh? We'll look at how dramatic it really was. I'm so rich. I'm so poor. Let me change the template. Oh, I like my day trading. I like the way you template. Hmm. Yeah, this is where we were yesterday, remember? I'm like, yeah, it's all paper money. Spend it while you can. Spend it while you can. Look, so we do our webinar here, right? I'm like, spend it while you can. It's all going to go away. Oh, sorry. I'm so rich. Oh. But, whatever. It's how it is. We'll do like USD yen, I think is a little more interesting. We even have it here. Okay. So, looking back in history, once again, if you sold the red zone, you did fine. If you bought the green zone, you did fine. Isn't that funny? That's on the high volatility of things, obviously. And then what? Right? Buying retracements, right? I don't have the normal moving averages going here, but you get the point. I don't care what moving averages you use. That's the point of these ribbons, right? I just don't even care what moving averages you want. It's not even important. Any moving averages, as long as you're making intelligent decisions, right? Running into some monthly issues, huh? Pretty cool. And if you're a bear and you sold the higher high, but you sold it because of the red zone, it's okay. You wouldn't have lost very much money. I mean, that's called trading, right? That took the shot. I understand what you did. Do you guys remember yesterday? What was it? Euro USD, I was heavily short, and you could see all my limit orders sitting right on top of a pivot point, like a reversal green zone, I think. I think I was short, and I had like 6 or 7 of these limit orders for profit just above the green zone. Like, well, you could look at that and say, oh, I get it. I see what he's doing. He's taking profit just before support. And it has to be a little bit above because I got to account for the spread, right? And you would look at it and say, oh, yeah, I get it. So as long as your trading makes sense, it's fine, right? That's all I ask is just, I don't care if you're right or wrong. If you sold here and lost money, oh, I get it. I get it. Maybe you're a bit aggressive, right? You sold it right next to the 106. Like, why not, right? Right? Where's 106? Right? I mean, I get it. I get it. There it is, right? Here's 106. I get it. Cool. You sold the 106. Great. No, it didn't work out. It's too bad. You notice it only dropped 100 pips. Is it plausible you made money? You sold it at 106, it dropped down to 105? Yeah. So maybe you still made money, right? 106. There's 105. Let me mark 105. 105.14, 104.48. So that's about here. Yeah. So you still made money. Okay. Once again, if you just stuck to your guns and did what you're supposed to do, not too many problems recently. Yeah, my message recently was buy the stock market, even though it was down for 9 days in a row. It's just skyrocketing. Yeah, you're welcome. Pound Swissy. Okay. Once again, this is a difficult one to trade because we are in the sell zone. I know this label is wrong, but wow, it's still wrong. That is so weird. All right, so you can see if you trade the higher high, see indicated here, the higher high tells you to buy dips, right? But now, let's say you're a bear on this pound Swissy. Remember, this is pound Swissy. If you're a bear, you have a trade right this second as we're looking at it. You have the resistance and you have a potential double top. How are you going to trade it? Where's the next level of support? Down in here. Okay. So if you're a bull, if it drops down here, you're going to buy. If it makes a higher high, you're going to buy that retracement. But right now, there's no bullish scenario. There's only a bearish scenario. So you either are selling this right here, right now, or you're waiting for a reason to sell it. So maybe you do something like that, and then you do something like this, and then you do something like that. Okay? But the point is, you're ahead of the curve. You've been waiting for this for, 8 hours. You either sell it right up high and your stop is just above. What's the big deal? Right? So you're already short. Okay? Or you're waiting for plan B, which is the lower low, lower high scenario. Okay? But you can see even on the 5-minute, drop right where it's supposed to. That's what you're looking for. Retracement back to the actual pivot. Look, this is the actual pivot. So now your stop is above there. So, it's, let's say your stop is, anywhere above this area. So that's it. This is your risk zone, right? This is your amount of potential loss. Okay? Because if you had like a checklist, are you a bear? Yes. I'm not saying you should be, but why not be a bear on, or a bull on the Swiss franc, for example? Why not be a bear on the British pound? Seems logical to me, right? Number 2, are you at resistance? Yes. Number 3, are you trading a reversal pattern? Well, it's the aggressive entry on a double top, but at least you got a double top. It's not just a one-toucher, right? Is it a double top? Yes, right? So you got that scenario, and then the next one would be lower low, lower high, 1, 2, 3. So the first trade plan, double top. Second trade plan, 1, 2, 3. Okay? But if you're a bull, you're like, all right, well, we're having trouble here at the reversal pivot, which makes sense to a bull. A bull doesn't, it's not going to freak a bull out. That's what it's supposed to do. So they're thinking, oh man, if I can get a pullback to the bottom of our range into this roll reversal going back, remember on the higher time frame, it's a roll reversal. Okay. Oh, and then this one is the bigger one, right? So either way, the bull's like, okay, well, my next move, buy it here, buy it there. They already have a plan. So now they're waiting, like, let it fall. But that's the funny thing. That's why you should sell it, because they're willing to accept it. Right? And then if they're down here, they're going to buy again. If it drops below that, you're going to lose so many bulls. If it drops below this bigger gray zone, you're going to lose a lot of bulls. And therefore, we're going to drop down to the weekly, right? Down into here, M4 to M2, because we'll run out of bulls. What? We'll double bottom now. We'll go all the way down to the bottom of the range. I bet you weren't thinking that when it went up. Well, you're probably not thinking that as it comes down, right? Right? James says, yeah, 1, 2, 3 in place on a 1 minute. Yeah. Yeah, see, that's your alpha, and all of that doesn't matter to me. The mechanism for which you pull the trigger, I don't really care, what it is. Right? As long as you got a good strategy, right? As long as it makes sense. Whatever makes you sell a double top at resistance, I don't care what it is. Yeah, I'm not looking at it, but we can take a look. I mean, there you can see the 1, 2, 3 on the 5 minute. Well, it's the same thing as the 5 minute. It's the same 1, 2, 3 as the 5 minute. Right, and that's the one. Yeah, I'm assuming you see that as obvious, but maybe it's not. So let me draw it. So you have the big 1, 2, 3, right? And then the micro 1, 2, 3 is this one, from the top to the bottom, down, right? So the components of a 1, 2, 3. I can't get a drawing tool. Hold on. Hopefully it doesn't freeze everything up. Okay, the first part of a 1, 2, 3 is what? Boy, I've been in college too much. What is the first component of a 1, 2, 3? Double bottom or top. Excellent. All right, so we already know this is a double top because I've already shown it. Oops, come on, drawing tool. Let's do it this way. Okay, we already know that this is a double top from way over here on a higher time frame. Okay, oops, that's supposed to be an arrow. Okay, so we know that is the double top. Okay, so that's the 1. The 2 is usually a lower low. It's not a significant lower low, right? So you got to be a bit aggressive. And 3 is the lower high. Okay, see, if it was bullish, this was supposed to be way up here by now, right? So the fact that it's not gives it potential for the double top 1, drop 2, retracement 3, lower, which is a lower high, and then 4 is down. Okay. Bulls are going to want to buy this area here, you see? Okay, so once again, I don't care whether you're right or wrong. I want you to trade it based on something you can tell me ahead of time. Okay? And that is whether you're a bull or a bear. Okay? You could just say, Wayne, I see it this way. Bull. Great. So we know how to trade this. You look for the retracement into the roll reversal, which is this area, and you're long. That's all it is for a bull. That's a swing trade. Okay? That's it. There's nothing else. Nothing else matters. Anyone can see. Okay? Got it? The rest is just you complicating things. So now in this 5-minute jungle here, yeah, there's going to be like fights or fights like this. And this is where people end up losing a lot of money, right? Oh, it's falling, they sell it. And then they're like, oh, it's rising, then they buy it. And you don't deserve it. You don't deserve the victory. You're making it up on the fly, right? So if you do what you're supposed to do, if you're a bear trading a double top, again, I don't care if you're right or wrong. If you're trading it like a double top, you're probably short in here, your stop's up in here, and you're not even watching this anymore. What would be the value that you're adding by watching it? It either falls off a double top or it doesn't. If it doesn't, you lose 15 pips. 15! How ridiculous. 15 pips. How ridiculous. Right? And bulls, I don't know, maybe you took profit and you're waiting for a higher high, or you're waiting for the low if you're a bull. Or you never got out, and I don't like that if you're a bull on this and didn't get out. You're supposed to get out. That's why we're going through all this hesitation, right? So maybe they're prepping for the second chance. Anyone can see. All right. I should be careful. I got stuff on here. All right. Let's go surfing now. Everybody's moving home. Come on now, safari with me. Okay. So what are you going to do? This is telling me double bottom. Are you getting the same vibe? So this is an inverse head and shoulders is I think how you can play it. So the first part of that is, do you have a trend? So we'll call that a downtrend. Okay. Retraces into the 21, supposed to make a lower low. And, look how we have support here. It's funny how we had this like weeks in advance. I mean, it's, right? It's beautiful, actually, isn't it? That when we were at 55, I think we were drawing stuff like that. But anyways, supposed to make a lower low, did not, retrace to the 55, right? So I'm thinking something like this. Okay. Again, not based on supply and demand, just a short-term Trump effect. Or actually price effect. I'll go back. Maybe we tickle 44 and then go up. What? But no reason to make a big stink about it, right? It's not because of anything except price. You guys okay with that? So you have a decision to make on Aussie yen, right? You're buying it or you're going to sell the lower high. Has anyone made a decision on that one yet? Okay. Oh, my glasses are dirty. I guess we'll have to do that then. Let's look at it. Ah, I hate when it does that. It's going to pull up CAD yen. I don't want to talk about CAD yen. I mean, you can. I guess it's exactly the same thing. I don't want to talk about it. I want to talk about all things. Well, Miles, maybe the strategy is different. Like your, I don't know how anyone can say your strategy is fine, except when you're wrong, it's devastating. Right off the bat, that sounds dumb. So I don't know what you mean by strategy, but you need to figure out a situation where when you're wrong, you end up not trading a lot. Okay, but there's no good strategy that is devastating when things go wrong. That's a bad strategy. I'll give you an example. One that lots of people have to pawn off are grid type strategies. And these are the idiots that usually have like 90% winning numbers. And then you look at it and they have, long periods of not trading and then long periods of lots of winners. And what they're doing is they buy low, and then they buy lower, they buy lower, and then they buy lower, and they buy lower. And finally, it hits a monthly reversal pivot, and then it starts going back up again. And then they take all these little winners, and that offsets some of their little losers. So on the way up, they're actually adding more. So they buy some more, and they buy some more, and they buy some more. And finally, those new winners are counted as profitable trades. And then the old ones, which were big losers, they're taking now 10 pip wins on them. And at the end, it's like, see, I got 19 out of 19 winning trades, except when it doesn't come back. And maybe it doesn't, and it doesn't happen often when you get a sea change, but they do happen, and all of a sudden you got 19, 29, 49 open trades are all losing. I once saw a guy that had hundreds of losing trades open. And he's like, yeah, but they're just small trades. Right? And they're like, oh, it's a good strategy. It really works. Except when it doesn't, it blows up my account. Well, then that's a dumb strategy. You just defined it. What you want is a strategy when it works, and when it doesn't work, you don't lose a lot. That's a good strategy, right? Yeah, but see, now that's not a good strategy either, Miles, right? Because now you don't have, so Miles says he doesn't make a lot of trades. Well, but then that means you face risk in a different way. Okay? Yeah. It's just a different type of risk. And Trade the News just gave me an alarm, but I can't find it. I have too many windows open. Trade the News, Trade the News, Trade the News. I don't know which browser it's in. It's the downside of having 18 screens, right? I just never know where anything is. I don't know where my Trade the News is, but I heard it. Oh, this one maybe. Oh yeah, here it is. Initial jobless claims better than expected. Canadian housing as expected. Everything fine there. No real news. All right. So what I was suggesting here is you need to be making decisions. Whether you want to buy this or sell it. Okay? So you need to mark it up. First of all, our high. That's an easy one to mark. This is going to be an easy one to mark. Okay, that's fine for now. Zoom in. Okay. Then you need to decide if you're going to buy this. I guess what, on an hourly chart? Do it this way. All right, you need to decide whether you're going to buy it in here. Okay, and make it long, or whether you're going to sell it here and make it short. Okay, this is what you need to decide. But if you're a buyer, I mean, right, I told you about this even a couple of minutes ago, even 2 minutes ago. You should have been ready, right? Which means you should have been ready half an hour ago for the setup. Okay. At the very least, when you're trading a demo, you don't even need to trade. You should just draw these things and then find out which one happens. But you should just practice predicting the future. You're like, all right, this is a key area. I think it's going to go up. I think it's made a higher high. I think it's going to make a dip. It's going to need to retrace to the 21, and then it's going to go up. Probably needs the U.S. stock market to do it, right? So you end up practicing. Trading is the silliest part of trading is trading. Right? Once again, the example is, golfing a lot doesn't make you a better golfer. Okay. So you can see there's plausibility for both of these things. As a bear, the lower low, so you might want to mark that, is going to set you up for the lower high on this time frame. Okay? And bulls are looking at it differently. You need to decide how you want to play it. Are there any psych levels? Not here. The psych level's farther down, which would be a very interesting thing where the bears bring it down here and then the bulls take it back up. Well, that's plan B, isn't it? Cool, huh? So I'm probably going to talk to a guy today on the phone that has 50 years of trading experience. Trading experience. 50 years. Kind of looking forward to it. He's 86 years old, lives in a castle in France. Sorry, France. And he still trades. Yeah. Yeah, that's totally cool, right? Isn't that neat? Yeah, it's not a job. It's a lifestyle for him. Apparently, he's retired 25 times, which is funny. Apparently, he's got beautiful offices in Paris, but he rarely needs to go in and do them. Well, yeah, why not at 87? But apparently, he just makes, like like hundreds of millions and billions of dollars, right? Like the guy is just unbelievably, ridiculously successful, right? But he loves what he's doing, and he does it because he loves it. He doesn't do it because he needs the money. But he has a fascinating life, and he knows everybody, and he's super powerful. And we need some favors, and he knows some people, and he can make some calls. So, but I'm looking forward to talking with him. One addicted person to another, right? I don't think I don't think crack addicts have very good conversations with each other, but maybe trading addicts do, right? Yeah, I don't think crack addicts have good conversations. I suppose it's been better than a desperate housewife that sits down with a bottle of vodka and watches Oprah. Folding laundry. Oh, it's only funny because it's true. All right. So, anyways, there's that plan A, plan B. Look at that. Whoop, 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 whoop. And that's what your life is, guys. Plan A, plan B. Plan A, plan B. Oh, higher high, buy the dip. Higher high, buy the dip. Higher high, buy the dip. No higher high, don't buy the dip. Lower low, sell the rally. Lower low, sell the rally. But more important than all of that, what I'm babbling out is price action, as you guys know. More important than price action is support and resistance first. You need to go through your chart. This is support. This is resistance. This is also support. This is also resistance. And then the second part is trade the price action off support and resistance. Once again, the guy that sells, $3 and $4 and $5,000 seminars about Japanese candlestick patterns, his number one rule about candlestick patterns is that if it's not at support and resistance, ignore it. That's it. I just saved you $3,000 for a weekend. If it's not at support and resistance, ignore it. If you see a reversal candlestick pattern, but it's not at support or resistance, ignore it. Well, why wouldn't you just buy or sell at support and resistance and skip everything else? Yeah, Joseph. But Joseph, that's not an unusual thing for Carl Icahn as well. But what it means is up. And the interesting part of it, I suppose, though, about Carl Icahn is he knows Trump. Trump talks to him. They probably drink together and smoke cigars together. And he knows what Trump's likely real plans are, right? In true Machiavellian sense, you say whatever you need to say to get elected because people are stupid. They're too stupid to realize you're lying to them. So you just say whatever you need to say to get elected. Even if you're a good person, you should lie because most people are stupid. But you lie because you are the better person, even morally better, even though you're lying. If you believe you're the better person, you need to do whatever it takes to get elected. And then when you're elected, lead out of benevolence if you want. Do the right things. Make the universe a better place. But you could be the better person, but if you don't get elected, it's pointless. You know what I mean? So just lie. Just absolutely, totally lie, and and use every means possible to win. That's what Machiavelli wrote in the 1500s. Okay? And then once you're a leader, then do whatever you want. So, it'd be interesting to hear the conversations that Carl Icahn and Donald Trump had while he was still running. And Carl Icahn's like, oh my God, Trump's actually going to win, and he knows what Trump's going to do. Let's say he will do a massive fiscal stimulus package, which is funny because it's actually a very Democratic Party kind of thing of massive spending, right? But anyway, so if that's what he's going to do, that will push the stock market up. It just will. And Carl Icahn's like, oh my God, he's actually going to win. I got to go. Boom. Free money. Because Carl Icahn's the kind of guy that will wake up in the morning, look at his account, and be up $1 billion and say, oh, it's a good day. Well, Ryan, billion into the S&P 500. I don't know about that. I doubt it. So, let's just say when you have a lot of money, if you have a lot of money, like we're talking billions and tens of billions, things are way different. I mean, there is a sort of Illuminati world out there where Carl Icahn's not buying the S&P 500. He's buying something, but that's what the S&P 500 is for peasants. You know what I mean? That's for your 401k. When did right? When did mutual funds and indexes like the S&P 500 come together? When people when companies stopped offering pensions, and instead you got retirement plans, and all of a sudden, like mutual funds and indexes start coming available, right? And that's great for grandma's pearls, Jimmy's college savings fund, right? But when you got tens of billions, oh my God, it's a completely different world. I mean, just things don't forget it. Just forget about it, right? Just forget about it. And what's amazing though is it's amazing. The bigger you are, the less risk you end up taking. More and more and more and more are sure bets, right? I'll give you an example. Like, let's say Ford Motor Company issues a new bond. They want to raise $20 billion to build a new factory. And usually what they do is then they go to their underwriters, and then their underwriters go to their sort of dealers and brokers, and they piece up the $20 billion and they sell it out into smaller chunks to the point where even retail investors can buy like $1,000 Ford bond, right? And it pays 5%. So, you know, grandma buys $1,000 bond from Ford, and Ford will pay her 5%, and at the end of the period, she'll get her $1,000 back. But you could also go directly to the underwriters and say, so what do you guys got going on? They're like, yeah, well, we got this $20 billion deal from Ford. 20 billion? What's it pay? It's going to pay, 5%. Cool. We'll take it. We'll do it. And they say, dumbass said, what? We'll give you the 20 billion. And all of a sudden there's no middleman left, right? All of a sudden it's just the underwriter, and you're like, I will give you the 20 billion. Okay, and by the way, this happens all the time. Okay? What do you think happens? What normally happens in the world when you buy high volume? Yeah, you get a lower price. You get a discount. I'm not joking. And all of a sudden you're like, well, we'll give you 90 cents on the dollar. And they're like, done. Because it cuts out other costs anyways. See what I mean? They might have had to like figure out like, okay, well, the cost of this capital market, offering, as we go through all the different layers to find enough people to sell the 20 billion. Let's say our cost is 13 cents, right? So by the time you pay for your cost, maybe they only get, instead of the 20 billion, they only get 17 billion or whatever, And so you come in there and you buy it. But you pay less. And then you could also dump it. If you want, you could also dump it, or you can hold it. So, right? So you pay Ford, let's say it's 1 year, you pay Ford $17 billion. They pay you the 5%, and then they give you 20 billion back at the end, whatever it's 1 year, 5 years, 10. Maybe it's 10 years. Okay? Is that right, Travis? Yeah. So anyways, it's an interesting world because you just bought $20 billion worth of assets for 17 billion. And maybe it's 18 billion or 19 billion. You understand? But you're like, you're going to make $1 billion plus 5%. How hard is it to make $1 billion in this world? Legally, right? Without cocaine, without smuggling oil from Darfur and selling it to China, it's difficult to make $1 billion. Yeah, it depends on what you're working with, right? But if you could just go in and say, well, we'll just take the whole damn thing, and you can access $20 billion or 17 billion or 18 or 19, whatever you're buying it for, right? Let's say $19 billion. Right? And then you're going to make money, $1 billion plus the 5%. Done. And here's the interesting thing. How many factory workers are required to produce $1 billion worth of value? Factory worker makes $9 an hour, or let's say $12 an hour. I don't know. Actually, I have no idea. $20. I don't know. How many hours? How many man hours does it take to make $1 billion worth of value? And then you think of the guy, right? Then you think of the guy that says, all right, I'll call my bank, they'll issue the credit, they'll transfer you the 19 billion, I'll get the 20 billion in bonds, you'll pay me the 5%, and in 1 year you'll pay me 20 billion back, and I'll sit on my fat arse and smoke cigars collect my interest payments, and wait for my $1 billion profit. While all I did was access credit from my bank. And you just, nice, right? And you haven't even done anything. You made a phone call. You signed some paperwork. And you're going to collect $1 billion plus 5% on $1 billion, by the way, is not a lot. Or, right? Oh, wait, it is. It is a lot, right? Think of it. Just the 5% interest. You can go out and buy yourself a ginormous yacht the size of an island. Okay? You see what I mean, guys? You didn't even have to get out of bed. So that's what I'm talking about. Like Ryan, you know, when he puts $1 billion to work, I highly doubt he's buying, you know, I mean, if anything, they're using the S&P 500 to hedge. But even then, there's better ways to hedge, right? So these guys are smart. They get into deals that are sure things, right? They put their money on sure things. Yeah. Oh, it's smart, right? So, anyways, I can't wait to talk to this old guy that's been doing stuff like that his whole life. Right? How cool. And when it's big and high end like that, it also comes down to who you know, right? Because imagine you're sitting there working really hard, smoking your cigar because you're so powerful and rich, and you're sitting there in your castle, smoking your cigar, and the phone rings, and it's your buddy. What's up? Wasabi! What's up? Wasabi! Right? What's up, bro? Hey, I got this thing from Ford. I think you want to take a look at it. What is it? Well, it's 20B. 20B? Well, what's the discount? How many points? Oh, well, we're thinking we could probably get you 2 on it. Well, if you can do 3, I'll take 3 points. I'll transfer the $17 billion to you today. I'll have my letter of intent. We'll get proof of funds and everything sent to you, and we'll set it all up. And I'll send you a Porsche. Cool, right on. High five, high five. Thanks for the call, buddy. See ya. Click, boom, just made $3 billion. What a good day. Where's my lighter? My lighter's out of fluid. Click, 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 click. Oh, damn the lighter. Right? That's the stress of your day. Can't get my lighter to work. All my lighters are out. How am I going to light the cigar with a click, 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 click? Oh, stress. I got to go have a massage. Got to have a massage. This is so stressful. I'm working too hard. I need to relax. Yeah, first world problems, right, Bongs? Yeah, but let me tell you, the guys that are running your show are doing stuff like this or paying other people to do it. Right? No, it's third world problems too. Yeah, but I don't know. So, anyways, yeah. So maybe Carl will go by. I'll look at the time while I'm babbling on. Yeah. Sorry, I'm running on. Adrenaline. Right. Sorry. I'm just totally on adrenaline. Oh, did I just fall asleep? Oh, sorry. So, um, yeah. So, anyways, Miles has been the big coach today. We need to pray for Miles. More importantly, he needs to figure things out. Hey, Miles. I mean, because that's redonkulous, and this was a test. So, this is where you need to like talk to your mom and say, "Hey, Mom, what was I like when I was a kid? What did you do to really get, lessons through to me?" I mean, seriously, right? Like I just went into a big test and I blew it, but I want to succeed. I know I can do this. I want to be better, right? right? That's what you got to get in there and find out. Just do, and those things are really interesting. Do whatever it takes to find out how to get your act together and, you know, be the trader you want to be, even if you're faking it or even if you're not doing a good job at it. At least struggle to maintain the, you know, doing the right thing. It's like, it's funny, again, using golf as an analogy. You know, my dad golfs all the time, and I golf only when he's here. But I know how to play. It's just I don't play well because I don't play at all, right? So there's these problems where, you know, I'll slice and slice and slice, let's say with a driver, but I can hit far. But the problem is they start in the middle of the fairway and then they end in Tokyo. And he's like, well, just use your 3-wood. And I'm like, I would rather die than use my 3-wood. Because the shot that's required requires a driver. I'm supposed to be able to do that. And I'm not going to play my lame-ass game to be safe. I'm going to play the game I'm supposed to play because I'm here playing golf, and I need to get better at playing golf. This shot requires a driver. I'm going to practice using my driver, and even though I'm not getting good results, I am going to try the best I possibly can with this shot. I am going to aim, I'm going to line up, I'm going to take the practice shots, I'm going to follow through, and I'm going to watch this ball kind of go toward the place where I want it to go. And even if it lands on the far right side of the fairway, it's the right shot, and I'm going to practice doing the right shot, even if it sucks. Right? But I think trading's like that. Like, at least, even if you're not doing it well, even if you're failing at it, keep practicing being the trader you want. And this is where, if you're a bull, go dang it, buy the dips after higher highs and drop the stops and just keep doing it. And when you're not getting success, try to figure out why. And you're like, oh, well, I'm buying dips after a higher low or lower high. Well, that might be very bearish. So I need to practice buying dips in a bearish scenario, and how do I remove that risk, and what kind of entry do I need? But just, you're so laser focused on trading in the particular way that you want, even if it's leading to failure, you're consistent. And we know the patience and consistency will lead to success someday. Versus trying a little of everything and chasing price all over the place. That's a guaranteed loser. It never works. It never has. Okay? Yeah, but like I said in my book, Miles, right? Only amateurs worry about losses. Okay? So you got to, so you need to figure things out. You need to lower your lot size until the loss is meaningless. And then focus on trading the way you want. And like, I think out of the last 400 trades, I got 76% winners. Okay, so like, well, what's the big deal with that? Like, I hate high winning, right? Well, it's been good trading. But what does it show you? Consistency. That's what it is. It's not necessarily luck, because the sample size is too big for luck. It's doing the same type of trade again and 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 never deviating, ever. And that's it. I mean, and when you take trades that are supposed to make money, then you make money most of the time, right? But even the making the money thing, that has nothing to do with it. It's the consistency and control, right? I keep telling you, trading's boring. It's like going into the factory, clicking, punching in your time sheet, sitting down at a bench, and a bunch of cans come down full of peaches. They're coming off the machine, and labels need to be put on. And you put the one label on, put the glue on, next. Next label, next. Another label on that can, next. And finally you got enough cans that go on on a flat, and we push the box over there for the boxing people. And then, oh, another can. Put that label on, glue it, next. And I don't know why your job is manually putting on labels on peach cans, but that's your job. And it's boring, but you get really good at it. You're not even thinking about it anymore. You can think about life's greatest problems while you're putting labels on cans, and and finally you get your quota, and you're like, well, I'm a little bit done a little early. I can do a couple of more. I can have a better day. Maybe my boss will be happy. Maybe I'll get they'll take me out for lunch one day. And you do a couple of extra cans, and then end of the break, punch out your card and go home. And your spouse says, "How was work, honey?" Like, "Oh, it was great. I got a couple extra cans in. Other than that, it was pretty normal." Okay? I am absolutely okay with being wrong. And I tell you these things. I don't care if you're wrong. If you sell it at resistance, and the only way you can lose money is if the trend breaks the resistance, but most of the time it doesn't. That's the thing. So you could guess about 70%, 75% of the time, it'll fall at least a little bit, right? And if it goes up, like, oh my God, look at that, it broke resistance. Holy crap, the bullish trend is so strong, I think I'll back out. I better stop doing what I'm doing. You see what I mean? Versus, I'll keep losing money 9 other times. No. If it broke through resistance, why are you a bear? You were wrong. Where's the next level of resistance? And how are you going to enter that one better? Is the better thing. You see what I mean? And then when you're right, squeeze lemonade out of that lemon, Bubba. Your trading shouldn't be like getting blood from a stone. Okay? Right? It should be easy. So anyways, guys, I'm sorry it took so long today. Like I said, I'm running on fumes and on adrenaline and 9 cups of coffee and 4 energy drinks and yeah, all that kind of stuff. But I love you, man. I want you to succeed, and I hope you know that. Keep trying. We all go through these periods of struggle. It's what you do next that matters the most. It's your second test, Miles. You failed the first one. What are you going to do on your second one? You better stand up strong, stand up proud, dust off your shoulders, right? What I did in the past is I actually went on business planning retreats with myself, um, meditative retreats as well. Just whether it's on your own or it could be a staycation, but you need to maybe. I don't like the idea of stop trading, but like over the weekend, you need to have some serious heart to heart with yourself, and know exactly what you're going to do next week as far as the things that you're going to do differently. And I mean, like, you're writing out trade plans by drawing them on paper. You're going to spend X amount of time every day on fundamentals. You're going to do. I mean, you need specific, concrete changes, not just this idea that you're going to trade better in the future. That doesn't work. It's way too abstract. Okay. Got to jump, babe. It's been real. See you tomorrow. Cheers.